Dow component Home Depot just out with earnings. Profit coming in for the company at $4.53 a share for the second quarter compared to a consensus estimate of $4.44. Revenue also topping Wall Street forecasts. Comp sales were up 4.5% compared to an estimate of a 5% increase, although the average customer ticket did jump by more than 11% from a year earlier. For immediate reaction to the report, let's bring in Brian Nagel, analyst at Oppenheimer. Was there 11% inflation on the stuff people were buying, or did they actually buy bigger tickets, Brian? I mean, that had to play into it to some extent.
Good morning. Look, it's probably they bought bigger tickets. I'm digging through these results right now, and it's a short release from Home Depot, but there's some really interesting numbers here, as you pointed out, Joe. I mean, one, comp sales did miss consensus expectations, but I think the more important message is, these comp sales, while still positive, so that's a big positive for Home Depot, but they have slowed significantly from what we saw in the last couple of quarters, where domestic comp sales were tracking upwards of 30%. So here we're seeing 3.4%. So a significant slowdown here in sales growth at Home Depot. And look, that's happening as these comparisons are getting a lot more difficult. And despite all the talk about Delta and such, the COVID crisis is beginning to abate.
So what is the macro either headwinds, or it sounds like headwinds, that the company's experiencing right now? Is there a stimulus fatigue? Is the end of that in sight for people that had checks to spend on home improvement? Is it, where are people? They going back out, or are they coming back home because of Delta? I mean, where are we on that whole cycle in terms of the pandemic plays? Home Depot, I guess, was a pandemic play for a while. But then you think when you come out of the pandemic, it should do well also. So this is a little bit surprising that you're seeing a second derivative slowdown.
Well, look, there's a number of factors at play here. Okay, in my mind, this is something I've been talking about a lot for a while now. I think the absolute biggest factor is these more difficult comparisons, and then probably more important than that is what's likely to be some type of normalization in spending as the pandemic subsides. And basically what I'm talking about there is that, just like you said, home improvement was a big COVID winner. Home Depot performed masterfully through the crisis. They served their customers extraordinarily well. But I got to believe that as the economy opens up, as people start to move around again, there's going to be less of a focus on spending on the home. And I think that's what we're seeing in these numbers. Now, another factor that wasn't really mentioned in their release, we'll see what they say in their conference call, are these supply chain worries. Now, I'm hearing across retail, a lot of supply chain disruption. Now, Home Depot's a great company. They've got a lot of access. They have better access to supply chain than others, but that still could be somewhat of a factor here.
The key thing for investors today is the slowing in the comp store growth, or a stock that's moved to the extent that Home Depot has. I mean, it's got the 52-week low is only 246, but you go back a couple of years and it's a much lower level. So do you need to explain it any more than the stock has had an incredible run up to $350+ billion in market cap, and this is to be expected. I think you can see it on the chart right there. It doesn't look like necessarily the end of the world on that chart, even though it's down almost 5%.
Well, look, I think it's a combination of both factors. I mean, in my mind, like I always put the caveat or say, Home Depot's a great company, and I think there will be a time to buy the stock, buy it aggressively. I just don't think the market is prepared adequately for what's likely to be slower sales at Home Depot over the next few quarters. And I think what we're seeing in this print this morning is the first really clear indication of this. Again, comps stayed positive, but I think what the market's going to start to ask more and more is, what is that 3.4% domestic comp here in Q2 becoming Q3, Q4, and then Q1, arguably as these comparisons get even more difficult, and then hopefully as the U.S. economy continues to pull further away from the pandemic.